I'm one of those rare people that the only thing, I don't lose my appetite, I lose sleep, but no appetite. Okay.
Well, I'm looking at you and I'm not sure who you are right now.
Yeah, I know, this whole.
No, I don't mean that. I had this eye done 3-4 days ago.
Good morning, everyone. So we are starting the meeting now. Welcome to New York City Housing Authority's Audit and Finance Committee meeting. Today is December 12, 2023. We welcome everyone to the meeting. We also have our external auditors Deloitte with us, who will be doing presentation on their audit plan. And of course, we also have finance team, including the CFO as well as the controller of finance in NYCHA. So before we start the meeting, please place all your mobile devices on silent mode. And if you are a presenter, when you talk, please turn on the mic so that it shows green light. And when you are not talking, please put it off. This meeting is being streamed live, so that's why we want to make sure that everybody can hear the meeting. So for the record, now we will start with the roll call. DELOITTE'S, to my right, will start the roll call.
Good morning, everyone, and thanks for joining the meeting. We have with us our AFC committee members, AFC committee chair, Mr. Victor Gonzalez,
Here, President.
and AFC independent committee members, Mr. Mark Kaplan,
Present.
AFC independent committee members, Mr. Richard Kuo.
Here.
From the Office of the Chief Executive Officer, we have Vilma Hughes. From Internal Audit and Assessment, we have Anil Agarwal. And
Present, I am here.
myself Avik Das. From Finance, we have Anika Lescott Martinez.
Present.
We have Jeffrey Lesnar.
Present.
Arlene Naves. Amita Patel. Ihat Lee. Pakan Ho. Judith Francis. And David Sunshine. From Law, we have Jason Goldberg. From Deloitte, we have Jill Stortmeyer,
Present.
Daniel Cho,
Present.
and Darshan Patel. So we have the quorum in terms of the audit committee, and we can start the meeting.
Okay, so good morning, everyone. So Mr. Chairman, we have a comprehensive agenda for this meeting. First, we will have the approval of the audit committee minutes from last meeting. Secondly, we will have audit service plan from Deloitte. That will be the audit plan for fiscal year 2023. And lastly, Mr. Lesnoy will give a presentation on new accounting pronouncements which may have impact on financial statements of the Housing Authority for 2023. So we will start now first with approval of audit committee minutes, audit and finance committee minutes from last meeting, which was September 12, 2023 minutes.
So moved.
I have a question. Based upon the last meeting, I had asked about indirect cost rate for NYCHA. And I believe that was supposed to be checked on as to whether or not NYCHA was using its own indirect cost rate or whether it was using the standard 10% rate. And the question I had was, why isn't NYCHA using the approved indirect cost rate? So that was the question. And I don't know, I don't see that reflected in the minutes.
So I believe Jill had answered that question in the last meeting. And I thought it was resolved.
Well, I don't mean to.
No, is it in here?
Like, sorry?
Is your question?
I didn't see, in reading the minutes, I didn't see my question in the minutes. That's the only issue. I don't mean to be difficult, but that was
No,
my notes.
question, it has to be answered.
And maybe Jill had an answer at the last time.
I'll refresh my memory if I could, just after the meeting, I'll take a look at my notes and the report, and I can get back to you after the meeting.
Okay, but I would like to have it reflected, one way or the other, in either this meeting or future meetings, in terms of NYCHA'S indirect cost rate. Because that could have a great impact in terms of its ability to be able to collect additional revenues from the federal government.
I'm happy.
Unless those, all of your overhead costs are being covered by line items, that's possible.
So Mr. Koo, I wasn't at the last meeting, I was still on leave. But as it relates to our two biggest programs, the Public Housing Federal Operating Grant and the Public Housing Capital Grant, there isn't an indirect cost rate charge allowable in those grants. They have other methods through which we cost. So for the public housing operating subsidy, for example, the money goes directly to the AMPs for each development. And then the central office cost center is allowed to charge for specific items that we provide, financial service, administrative services, et cetera. So it's kind of like the central office is charging the property for reasonable services that it provides. And that's how it gets rolled up. And then on the federal, and in that space, there are some sort of bookkeeping fees and things like that you can charge, but they have specific thresholds and dollar amounts that you're allowed to charge per unit, for example. And on the federal capital side, same thing, the funds go to the development for the capital projects, and there are certain fees, administrative fees that you can take, and we do that on the operating side. So for example, we take 25% of the grant and we can transfer that over to operating, in addition to a 10% management fee on the federal capital grant. So it depends on the grant is the answer, but I at least wanted to give you the answer for the two biggest programs that we have.
The biggest one is the Indian and public housing one, right?
Right, both of those are through the Indian and Public Housing, correct, section of HUD.
And so that one has an indirect cost rate approved or not?
They don't call it an indirect cost rate, no. That's not how that grant works.
But I'm gonna need it soon.
What do they call it?
So on the federal capital side, it's called an administrative fee, where you can take the 10%.
Okay.
And on the operating side, there's no indirect cost rate
Oh,
at all. You have to sort of charge based on the central office services that you provide. But they don't have an indirect cost associated with our federal operating grant, no.
okay. Well, I would just suggest that perhaps the management look at whether or not there is additional funding available from HUD for indirect costs incurred not only by NYCHA, but by the city of New York.
What would be an example of the indirect costs incurred by the city of New York?
Personnel, finance, any functions that are related to costs that can't be allocated specifically to a specific program. That are involved in the administration of the programs,
Right, so the
including NYCHA.
Yeah, so in general, the city of New York is not really involved in our program administration. But I'm happy to look into this more.
Thank you very much.
Sure.
Try to find out from the city, then the city.
Well, I mean, okay, thank you very much. Other than that, I second your motion.
Okay, any other questions? No questions, right? Okay.
Can you please make sure though to Mr. Ku's first point that the question and answer is reflected in this?
Yes, so we'll include that question and answer in the minutes.
Thank
Yeah.
you.
Okay, thank you.
Mark, you have anything?
No.
So the motion,
Yeah, you made the motion.
I second.
He seconded. Mr. Kaplan?
Right, well, I'll third it.
Yeah, okay.
no, all in favor?
All in favor, yeah. Yes?
Aye.
Aye. Aye.
Okay, thank you very much. Thank you. So now we can move on to the second part of the agenda, where Managing Director of Deloitte, Jill Strohmeyer, will present their audit service plan for fiscal year 2023.
Thank you. So Deloitte has been engaged to perform the audits of the NYCHA financial statements as well as LLC-1 financial statements for the year ending December 31st, 2023. We'll perform those audits in accordance with two sets of auditing standards. The first, the standards issued by the AICPA, and the second set of standards are government auditing standards issued by the Comptroller General of the United States. We will plan and perform our audits to obtain reasonable assurance about whether the financial statements are free from material misstatements, whether caused by error or fraud. We have at this point identified one significant risk for the 2023 audits. The significant risk we have identified relates to management override of controls. Management override of controls is a risk just because of the ability and position of management, and they have authority, and they could influence junior team members to record journal entries that could be fraudulent. And so with that, every audit that Deloitte performs, management override is considered to be a significant risk. This is not specific to NYCHA or government, whether we're auditing a publicly traded company, a government, or another private organization, management override of controls is a significant risk. We have not identified anything at this point either. It's not that we've seen something at NYCHA that's cause for concern. This is just essentially par for the course. It's standard that every one of our audits has this tagged as a risk. We will test the significant risk a number of ways. The first way is to look at journal entries that are recorded throughout the year. We will look at those journal entries and apply some of our fancy technology tools to the journal entry population to understand whether or not journal entries were recorded on a weekend perhaps when management doesn't typically work weekends, holidays. If the president and CEO is making a journal entry in the system, that would cause us to flag the entry and look at it more carefully. So we're running tools to identify journal entries that have characteristics of interest to the audit team and then looking at them more closely to determine whether or not the journal entries have a business purpose and are properly supported by documentation. The second way we'll test this significant risk is to have discussions with management around estimates, key estimates, to understand the process, who's involved in determining the estimates. Are there experts, external experts, internal experts that have been involved? We're doing this to understand whether or not there's any bias when determining the estimate to record into the financial statements. Is there a better amount on the range of estimates to record? And finally, we'll discuss with management whether or not there are any significant or unusual transactions that are outside the normal course of business. And we'll understand those entries and why they were entered into and how they were recorded in your financial statements. If additional significant risks are identified throughout our planning as well as our substantive testing phases of the audit, we will communicate those additional significant risks back to this committee at a future meeting.
Sure. Just for my own clarity. So this is just, you were just pointing out something that could possibly happen and what steps you're taking to ensure that if it does happen, you're on top of it? Is this what you're saying?
Correct. We, as your audit firm, we feel that management is in a position where they could, not saying they are, but they could influence journal entries that are being recorded in the financial statement. And that's one way fraud could occur. And so as your external auditors, the standards require us to develop tests to specifically address this risk. And so that's what we're doing this year. We're looking at the entries that are recorded to understand if they are supported. We do this every year, by the way. This is not a new significant risk for NYCHA. It was here last year and the year before. We look at this every year. But again, not saying that there's an issue or a concern. It's just something that we will be looking at throughout the course of our audit.
This is the standard risk for all entities, not just for NYCHA.
It's a program, as I understand it, which reduces the amount of manual input into this program. So it's a great tool.
Yes.
Okay, all right, thank you.
So the next slide here shows additional areas of focus for 2023, not considered to be significant risk, but we will be focusing a good chunk of our time looking at these areas. Cash investments and debt. We're going to be looking at what we call SPIDAs, subscription-based IT arrangements. Jeff will go more into this in his presentation, but this is a new GASB accounting pronouncement that will be effective for NYCHA this year. So we will look at that. The next one is something called PPPs. It's public-public partnerships, public-private partnerships, and availability payment arrangements, GASB 94. Jeff will also go into this in more detail. But we will be, because it's a new accounting pronouncement this year, we will be testing that for completeness and accuracy. And if the number is 0, we will be looking at that as well to make certain that the number 0 makes sense. We will continue reviewing leases. As you recall, last year, NYCHA adopted GASB 87, which was a monumental accounting pronouncement. Big numbers were recorded on your financial statements for the first time. We will continue our work in this area. It will not be as intense as it was last year. We'll be looking at changes this year, new leases that NYCHA may have entered into, or leases that may have expired, or perhaps changes in lease terms. The next one is pension and OPEB. Pension, OPEB, they're big liabilities recorded on the financial statements, very large amounts, and so we will continue to do work there. Deloitte involves our internal specialist, actuarial specialist, to help us audit these account balances. Claims liability. Again, you're talking a very large number recorded on the financial statements. Specialists are involved, and so we will look at this again this year. Tenant revenues, receivables, subsidies, and grants. These are the revenues recorded on the financial statements. We will perform testing procedures, completeness and accuracy procedures around those balances. And then environmental pollution and remediation liabilities, this is your GASB 49 liability. We will continue to do work on this number as well, focusing on changes from prior year, whether it's additions or deletions to this liability balance in fiscal '23. This list is preliminary. We do look at more than what's here. This is just these are some of the big ticket items we'll be focusing on. We will also look at other amounts recorded in the financial statements as well as disclosures. And we will be looking at internal controls. While we don't take a control reliance strategy in performing our audit, which means we look at controls to make certain they're designed, they're implemented, but we don't use controls to reduce the detailed test work that we perform. So we do make a number of detailed selections from the actual account balances. We will have a materiality. We establish a materiality at the beginning of our audit, as we do every year. This is a number that we will use throughout the course of our audit in determining whether or not something should be recorded in the financial statements or something that can be passed on. It's based on professional judgment. There is an element of a calculation involved, but it also has elements of judgment that's involved as well. The internal audit function, we don't plan to use the work of internal audit function. We do read internal audit reports as part of our risk assessment process. We will do that later this fall. If there's anything that's highlighted in the internal audit reports that may impact what we do, we will then modify our audit plan as well.
Okay,
The
excuse me.
Sure.
Excuse me. Okay. It's just for my clarity, it's got nothing to do with anything else. I just wanna be sure with all the new things that HUD has implemented and all these new rulings and GASBs that are being used. And I remember that the standard for certain remediation as far as lead and all of this has changed. So again, just for my clarity, these new audits that you guys are going to be wrapped up in, and I'm sure that Mr. Lesnar and Jeffrey is going to be looking at as well. These new things, you guys are gonna include that in your audit for the change, the slight change that was made for the remediation of lead.
So management is going to calculate the lead paint liability at 12/31/2023, whatever that number is.
Okay.
And there's going to be kind of like a crosswalk from last year to this year that tells us how management got to the number at 12/31/2023. And so Deloitte will essentially audit that crosswalk or roll forward, taking the balance from last year to this year. There'll be changes, what we call additions or deletions. There'll be estimates that are changing within that calculation based on better information this year. And Deloitte will make samples and test some of those changes. And likewise, there are likely payments or reduction in that liability based on actual work that's happening throughout 2023. And we will also test some of those items as well.
And Jeff, you guys will be working along with management and Deloitte when it comes to these particular changes that have occurred.
Well, we work carefully with the Lead Hazard Control Group in order to access the data, to verify it makes sense, and to ensure we're calculating the proper data within the financial results. And then, of course, we share everything with Deloitte, and there's a testing process, usually a pretty significant process, which verifies whether our data makes sense or not, whether we have documentation behind it, whether there are any consistencies there. The biggest issue is always the positivity of lead. As we expand our testing, the percentages go up or down. Recently, they've been going up. That has an upward impact on the pollution remediation obligation. And that's something which I expect lead will pay a lot of attention to, as they always do.
And then all of this, and just to put in a word, the Google, the whole thing when it's put together, then you guys will let the board know how all of this falls together on the financial statement.
Is that being directed towards me or towards Bill?
Yes, to you.
Well, it will be part of the audit committee presentation in June, where we'll present the financial statements. We will present the large drivers of the changes. And we'll discuss any major impacts, including pollution remediation. I think that's always one of our standards. So yes, the answer is yes.
Okay. I'm just wanting on the statement, so to speak. Okay? I mean, it's just me being crazy. Sorry. I just need it on record, okay? Thank you.
Throughout the course of our 2023 audits, Deloitte will use a number of specialists to help us perform procedures. Very consistent with prior years, we will use actuarial specialists to look at both pension and OPEB obligations and some of the underlying methods and assumptions used in calculating those liabilities. John Potts is our firm actuary there. He's been with our team for probably the last 5 to 6 years, very familiar with your pension and OPEB obligations. We will also use actuarial specialists related to claims liabilities. Dan Leff will be our specialist helping us this year. Information technology specialist, we do look at your IT systems, key and relevant IT systems each year. This year we do have a change. You might have met Leah McGuire in years past. She usually came to one meeting with me each year, probably when we discussed the management letter comments as it relates to IT. She has recently retired from the firm, so we will have a new IT director this year. His name is Scott Maker, and he will assist Daniel and I in testing IT systems and controls this year. And finally, we have some valuation specialists, GASB 87 and GASB 96. Because management calculates an incremental borrowing rate to apply to some of the numbers that are calculated and to ultimately record the balances in your financial statements, Deloitte uses specialists to look at that incremental borrowing rate. John Solomon will lead the efforts again this year. He did so last year as well. At the bottom of this page, it lists a summary of reports to be issued throughout 2024. This timeline is very similar to last year. Subject to change if management would like to make any changes, but at this point in time, this timeline mirrors the timelines in the past. And then the planned timing of our audits, again, very similar to prior years. We perform some planning procedures. We'll be out here in the field conducting final test work March, April, May, and into June with anticipated June release of your 2023 audit opinion and financial statements. And the single audit will, of course, come in September of next year, similar to the timing this year. So I have included in here the peer review report for Deloitte. Under government auditing standards, I'm required to share with this committee the results of Deloitte's peer review report. This peer review report in this package is from 2020. Deloitte has undergone a peer review report this year. So in 2023, A number of our private company audits were selected by our peer reviewer, which happens to be Grant Thornton. We're waiting the final letter. I expect it to be released sometime this month. I know we're almost halfway through the month, but as soon as the 2023 peer review report is released, I will in fact send it out via email to management and this committee. I expect it to be a pleasant report. I will share with the committee a personal note related to peer review. I happened to be selected by peer review this year, not NYCHA'S engagement, but another one of my not-for-profit engagements was selected, it's single audit. Pleased to report that I did receive the highest rating of compliant, which ultimately feeds into the firm's overall results, which will hopefully be something I can share later this month. And a reminder, peer review happens to be just focused on our private company audits, like our government and public sector space. All right, with that, that concludes the presentation on the audit plan. Happy to answer any questions around the 2023 audit or Deloitte's planned approach for this year.
So, can I say at this moment, with regards to, because I was looking at it and I saw peers, and in my head, I thought it was people above, and so also the name of the audit. So can I say and be safe to say that kudos to you and Deloitte?
I would save it until later this month.
Okay.
I think so, but I would save it.
When the actual, okay,
I'm an auditor, I like to have the evidence in my hands.
got it, just double checking, thanks.
Go ahead. I have a question. Do you interact at all with the federal monitor?
We do not.
And that monitor has never, doesn't evidence any interest in your work?
I have not been informed that they've requested a meeting with Deloitte.
Some monitor.
I will say that we are going to have a new federal monitor. And so, you know, we will certainly let them know that Deloitte is doing our audit work, and I'm sure Jill would have no issue speaking with them, so I'm happy to offer it, but I certainly do not direct their work. But I hear where you're going with it, happy to just make sure they have the introduction such that they need it.
I'm sorry.
No, I'm just bemused by what the monitor is supposed to be doing and what he usually does.
I'm gonna, so that raises a question for me, because I know that we deal with the federal monitor, yes? And we get his report.
Correct.
And so now I'm curious, is there, before I ask the question, can I speak with, oh my God, I'm phasing out,
No.
yes. Give me 1 second. I'm phasing out because I'm not sure whether I can ask this question in public. And the other question is, why is it that the federal monitor and us do not include Deloitte? Would it be inappropriate?
But we meet with them, or there's
Because
Same, but with evil minds.
because he just asked.
pass the contact, but I can't fix them and talk to them.
And, I know that.
Feign interest.
So I'm wondering why is that not just the women
I mean, now with that,
Deloitte
you
in
know,
it?
and we are constantly.
Should I ask her that?
But you
Tell
should
me,
Certainly looking at the
be honest
overall.
with me. Yes.
Our challenges are not with our financial But yes, I'm happy to just go through. And if you want to, you should speak to that if they want to.
On that subject someday, somewhere.
Okay, so,
That's a good question.
okay.
No, they don't. I'm engaged with them on some accounting things and they're just like, this goes away.
Okay, so, I think the question that I have, I think we can. Let's table the question and I'll talk to you and Jeffrey
Sure.
on a separate note, and then I will get back to Deloitte as to what the question was. Okay?
Absolutely. Thank you, Mr.
All right.
Gonzalez.
In the interim, Jill, can I just ask a quick question? When you make the decisions as to the big 3 or 4 programs that you're gonna audit, the Indian public housing, Section 8 versus et cetera, is that part of this analysis or is that part of the single audit analysis?
That is part of the single audit approach and analysis, yes. And typically that decision is made once we have a preliminary STIFA, so the schedule of expenditures of federal awards. Once we have that for 2023, Darshan will go through a risk assessment process to determine which programs to test. We do have to test certain programs, it's required if they're higher risk, or it's a closeout program, or if there was a material finding in a prior year, we will have to test those programs in 2023. But outside of those programs, I wanna call it more of a rotation plan. We have to test your larger programs at least once every 3 years. So once we get the preliminary STIFA, Darshan and team will go through that process.
Thank you.
Okay, so any other questions on the Deloitte's audit plan for fiscal year 2023?
Richie? No.
Okay, so we need a motion to approve the audit plan, please.
So move.
Secondly.
Second.
Okay, thank you very much. So,
Don't you have to say all in favor? All in favor.
yeah, all in favor?
Aye.
Okay, thank you. Okay, so it's approved by all the audit committee members,
Second.
thank you very much. Yeah, okay. So now we can move on to the last part of the agenda, which is Mr. Lesnoy's presentation regarding financial impact of new accounting standards and pronouncements on fiscal year 2023 financial statements.
Good morning. This year we have 3 pronouncements that we're going to discuss that are applicable. They're a review of the financial statements, GASB 94, 96, and 99. And each of these have acronyms, as Jill referred to, public, private, and public-public partnerships, or what we calling PPP. GASB 96, subscription-based information technology arrangements, what we're calling it SPITA. And 99, we'll just call it omnibus because we couldn't find a name for it. Right, so I think the first thing to say is that we're still evaluating the applicability of the GASB statements, so there might be more news to come. We're going to share with you what we have at this point in time. Our management conclusions are preliminary, subject to change, and I think the key is Deloitte has not yet audited management's analysis and conclusions. And that's very important for one of these in particular because of our conclusions, but we'll get to that in a second.
Sorry, it's my fault, sorry.
So let's first talk about GASB 94, the PPPs. This is an arrangement in which a government contracts with an operator to provide public services by transferring control of an asset for a period of time. One significant requirement of a qualifying PPP is that the transaction be an exchange or an exchange-like transaction, meaning that each party provides equal or close to equal value. Initial review of the authority's transaction has identified the PAC program fitting the first requirement of transferring the control of the properties to developers over a 99-year land lease. So right now, we're in it until we evaluate the next step. In the event of a qualifying PPP transaction, the authority would be required to reflect on its own financials the building improvements made by the developer, with corresponding deferred inflow of resources. Likewise, the authority would need to depreciate the building improvements over the term of the assets and would also need to recognize revenue on deferred inflow of resources. However, this would require that we add hundreds of millions of dollars of capital assets to NYCHA'S financials for each qualifying PAC. So if we look at each transaction that's happened over years, and each transaction is smaller or bigger, they sometimes have 50, hundreds of millions of dollars of improvements initially over the first couple of years. And the statement, if qualifying to NYCHA, and that's the big if qualifying to NYCHA, would require that we record the same assets on our books and depreciate those over the life of the assets. However, the authorities concluded that the PAC transactions does not meet the exchange-like transaction criteria, and therefore is not qualifying under GASB 94. The rationale is that the developers receive benefit of rent and Section 8 subsidies, in addition to some tax credits at times. But NYCHA's primary source of compensation on recent transactions is a seller's note. Little real value is compensation. There is a stated value to the seller's note, but over the last 13 PAC transactions, only one has paid any significant seller's note payments to NYCHA. In fact, in the underwriting process, NYCHA typically assumes that the cash flow on PAC is minimal. In many cases, the principal isn't even to be collected, only interest in some cases. And other evidence that we have over the years, we've typically recorded a 100% allowance for doubtful accounts on the seller's note on our transactions, meaning we have the note on our financial statements, we have an allowance, they net to zero. So implicitly in our financial results, we treated seller's notes as zero financial value. Anything we get is kind of icing on the cake.
All right, so now, I'm sorry I'm being picky, but way back when we started talking about this, I asked you a question about the impact that the new conversions and all of this was going to have on our financial statement. And I believe at the time, correct me if I'm wrong, you said it wouldn't have a significant impact because we were already doing certain things within NYCHA. Is that correct, or did I hear that wrong?
I mean, I don't recall this specific conversation. I think what you might be referring to is that because these are land leases, we do not derecognize the assets, the buildings and land off of our financial statements. They stay in our financial statements over the transaction. And that will not change because of GASB 94.
It won't.
That will not change. What could change, except we determine that we're not a qualifying transaction, is that the developer's improvements post-closing would need to be gathered, corroborated, and reflected on our financial statements. But the point of the conversation is that it needs to be an exchange or an exchange-like transaction, which we've determined does not exist. And this is subject to Deloitte's review and conclusions also. So I think it's still at a preliminary stage, but this is what we've determined.
Okay, all right, now it makes a little more sense to me. I know you guys got it under control, but it didn't make a whole lot of sense at the time to me. Now it does. Thank you.
So regardless of the impact of GASB 94 on our financial statements, we are implementing in 2023. We're required to restate for 2022. We don't really expect any material impact of this particular pronouncement on the financial statements, but we're still required to implement it and continue to evaluate the transactions as they occur to determine if anything has changed. So we've recently shared our analysis and conclusions with Deloitte. They have not had the opportunity to review anything. So there'll be further conversations and audit procedures on this, I'm sure.
Can I raise a question, Jeffrey? Or
Sure.
Mr. Leslie? This PACT real estate has grown tremendously in terms of the last couple of years. What is in it? What has been in it for both the developer or the ones that have, the banks that have taken over the PACT or others? What's been their big financial incentive to do this? Is it because of the tax incentives, or is it because, why are they doing this? And what's the big advantage to NYCHA of this happening, other than, in addition to capital improvements? And could you just give me an overview of what the big benefit is to both the developer as well as to NYCHA for these PACT?
Sure, so Mr. Koo, I'm happy to answer from the NYCHA.
Maybe this is a separate session.
I'm happy to answer from the NYCHA perspective, although I can't speculate why the developers or the banks would be involved. So we're happy to, connect you with our real estate team who actually works with the developers, and they put together the deals. So what Jeff and his team does is we sort of take the transactions after they've been closed and make sure that they're reflected in accordance with GASB and all the accounting rules, but we don't actually negotiate with the banks or the developers. That's not our sort of role in the process. But I would say from the NYCHA perspective, it helps us to make as you mentioned, the capital improvements that we otherwise could not make on our own. So everyone, around the room probably knows that we did a recent review and found that we have $80 billion of unmet capital needs. And our, federal capital grant on an annual basis certainly can't even help us to get there. So from our perspective, what PACT does is helps us to partner with developers and banks. Partner with developers and banks to be able to raise the capital to make the improvements. And as well, public housing is not allowed to take on debt except through very specific HUD capital programs. So there isn't really a way for us to raise the funding to make the improvements that our residents need otherwise. So that's certainly what's in it for NYCHA. But I'm happy to connect you to our real estate team, and they can sort of talk to you about their conversations with the developers and the banks, as we don't work with them.
I would appreciate that as a committee,
Sure.
as our whole committee, to get a briefing in terms of the PACT and its impact on the financial statements, one way or the other.
Sure. So Jeff can certainly talk to that piece as we go
If you
through.
don't mind, that would be a
GASB
suggestion
94.
for another meeting, a separate meeting with the real estate group to go over that. I would appreciate that, if you could arrange that.
Sure, so internal audit team, you will follow up.
Only because of the importance of GASB also. It seems like a very significant area of concern. Thank you.
Yes, sir. Thank you.
Yes, yeah, we will consider that, definitely. Yeah, thank you.
Are there any other questions relating to GASB 94? Okay. GASB 96, Subscription-Based Information Technology Arrangements, SPITA. It's an ugly name. This one does apply to us and will have
As long as it's not Spitzer.
and will have a material impact on our financial statements, at least we believe from our initial analysis. This is an arrangement in which a government contracts with a third party, information technology licensing or software services for a term of more than 12 months under a non-cancelable agreement. As in GASB 94, in order to qualify, transactions must be exchange or exchange-like. However, substantially all SPITs are expected to be exchange transactions, so that won't be something that disqualifies us. NYCHA must consider the period where there is a non-cancelable right to use the services in addition to the period where it's reasonably certain that NYCHA will extend the term. For those qualifying contracts, the authority must reflect a new right to use subscription asset in addition to a subscription liability on its financial statements. Similar to the accounting implemented for leases in GASB 87, in that the present value of the future payments would be recorded. And to kind of give you an example, we have a contract with Microsoft and it's $100,000 a month for 5 years. Well, if it's a non-cancelable transaction, we would look at that, we'd say, okay, what are the total payments? It's $1.2 million a year, $6 million over the 5-year period. And if there's any extension periods which are reasonably certain to occur, and that's a difficult premise to achieve, but if there are, we'd add that on to the $6 million. And then we would have to discount that at an incremental borrowing rate, which needs to be determined, to determine exactly what is the asset and what is the liability that goes on the financial statements of NYCHA. But in the olden days, we would just kind of pay as you go, $100,000 a month. If we didn't pay it for some reason, we would accrue it, and we'd have all the expense on the financial statements, but we'd have virtually no asset, no liability. In the new world, we're going to have this $5 million of asset, $5 million of liability. We would depreciate the asset over the term of the transaction, similar to what we're doing for the GASB 87 leases. The liability would be relieved through payments that are made over time and through interest accruals that would take place. So the accounting is more complicated than it used to be, but it's definitely applicable to the NYCHA world. Now, we also need to go through the contract agreement to determine if there are any non-typical software license costs which should be excluded from how we account for the SPITs. For example, maintenance costs. Maintenance costs are to be kind of bifurcated, extracted from that, and treated as an expense. Pre-implementation costs might be treated in a different way. So we have gathered probably over 150 contracts to review. Not all of those contracts will be applicable. Some will be excluded because they're short-term in nature. They're 12 months or less. Some will be excluded because they're cancelable on both sides. Some because they're just not, software for services. But we expect that some of these will be very large, will be included in our financial statements, and will be material.
Jeff, excuse me. So, some of these are reoccurring. So, as they keep coming back, in order to be completed, will that in any way, shape, or form affect us? or is this just still part of the same process as we go?
Well, I think each year we need to go through the process of what are the old contracts? Are they still active? And what is the liability and asset for those? We'll need to review new contracts and determine if any of those are applicable and recognize the assets and liability. And there'll be kind of a rolling total that's going forward because some will get smaller, most will get smaller. Eventually they'll roll off, they may get renewed, they may not. So it's not a one-time event, but certainly the first year of implementation is the most challenging because we have to develop a process, we have to review 100% of everything up front and reflect the assets and liabilities on the statements.
As
So-
somebody who reads these things occasionally, I'm
I'm
trying
sorry.
to figure out whether there's any real improvement in the way in which one looks at the financial condition of an enterprise with the implementation of this new process.
Well, I just implement the statements.
I understand. It's been an expensive process to put it all together. And as a layman, I wonder what the cost-benefit analysis would show. It's not your question, because you have to live with the rules, but it seems to be.
There is a huge cost to it. In this one in particular, we've had to engage various departments and employees within those departments, procurement, IT, legal. You know, Jill was nice enough to arrange on a pro bono basis for us training, which we invited people from all those different organizations. They're involved in pulling contracts, reviewing contracts, working with the finance team. We have probably around 4 or 5 people that spend a good amount of their time on trying to analyze this and determine what the right thing to do is. So yeah, it's a very expensive process. In addition, we need to purchase some type of software for service in order to track all this data. So yeah, I think there's a lot ahead of us before we're done.
Yeah.
Excuse me, if I could interject, as a person who has been in the middle of all of this and have been affected in a way that, in a positive way, so to speak, a lot of this has helped get us the revenue and a better, and I know this is gonna sound a better way of living. And I think that this process has helped the residents move forward to a much better life.
Is it the process or the transactions that underlie the process? Because this is a way in which you account for something, as distinguished from what the underlying.
Well, let me put it this way. If there were a different way to make life better for the residents of public housing, I would love to see it. Unfortunately, this is the route that we have taken, and we don't know for sure yet whether this is good or not. But it has shown some positive factors. But now we're getting into a whole lot of stuff that we shouldn't be getting into. But
Could I raise a question?
that,
You said there's 150 of these contracts. Is anybody within NYCHA looking at the need for all 150? Whether there could be a consolidation or whether there could be an elimination of some of these contracts, number one. Number two, has anybody talked to whoever is in charge of GASB? I don't know who is, but is there a way to be able to pick, like, Deloitte does to pick, the highest number, no, there you have to do every one of them.
I can speak to that briefly. Deloitte does have a materiality threshold for which we conduct our audit. Management likely doesn't have a threshold because they wanna make certain their financial statements are complete and accurate. When it comes to auditing, I can apply a materiality threshold. Not to say that management can't maybe establish a threshold, and if it's, let's say, I'm gonna throw out a number of $1,000, if you have a contract for $1,000, maybe that's a threshold management can determine, and that if it's a contract under that amount, they won't look at it. That's something that possibly could be implemented, but generally speaking, management wants to get their financial statements correct and accurate, so generally materiality is not something that's considered by the management team.
So I guess the more important question is whether or not the 150 can be reduced to some manageable number. That's the question. I don't know who would look at that, but
Yeah, I mean,
perhaps internal audit could look at it.
it's a valid question to ask. It's not the primary objective of this exercise. But as we go through this, if we have comments or questions, we will consult with the IT department and discuss what the next steps are. But I'm not really sure if that's the objective of what we're trying to accomplish here.
No, I understand it's from an accounting point of view to make sure we're accounting for all of them. The question I have is whether or not all of those contracts or technological are in fact essential. That's the question, which is a management question. It's not a financial question.
Are you suggesting that we abandon some contracts because of this new rule?
No, I'm suggesting that there be a review of all 150 of those technology contracts to determine which ones are essential, which ones are not. That's all.
Well, but what is the result, what's the objective of that
The
review?
objective would be to consolidate, well, number one, or number two, to eliminate,
Well, that's what,
okay?
okay.
Contracts that are either obsolete or no longer needed or just whatever. It's a management question. It's an efficiency question. It's an internal audit question.
Question why the accountants put this.
And there's
in the first
150
place.
sounds like really a lot of technology contracts.
And just to clarify, the 150 is just a number that we're looking at now. We're still gathering
Could be
information.
2,000.
It could be certainly larger than that.
Exactly.
So we haven't gotten down to the final number.
So 150 is the baseline right now.
Yes.
So it could be more. So that's the management question, is not whether you should account for it or not.
That's a question you should ask the accounting profession, is why the change was necessary.
Well, that's another question.
Yeah,
So Mr. Hu, we're happy to, as Jeff and his team goes through the review, we're certainly happy to work with procurement and IT on exactly what you're saying here in terms of are those contracts necessary? But I think the point that Mr. Kaplan was making, we generally don't use accounting rules to make people change their management processes. But I hear your point though that, it's a good time since we have to do the review to determine and identify if there are any savings or just efficiencies that we can gather from the process. So we will certainly take that back.
Thank you.
Let me add something to this. So, before we go any further, and I'm sorry that we're putting a damper on your part of this. So now, this means that, well, from what I'm hearing, this means that we're going to have a separate meeting or the Audit and Finance Committee with management with regards to these numbers and contracts and internal audit. Is that correct?
We can have a meeting if that's what you're requesting. It would be certainly bigger than Jeff and I because we're getting into operational issues. So I know one of the follow-up items, for example, is the briefing from the real estate team. So that's certainly something that we could, put on if you also want to talk about our IT work and, their contracts. I think that is reasonable. I would say that, to Jeff's point though, they are in the very preliminary stages of their review, so we don't want you to walk away thinking 150 is the final number. It could be more, it could also be less. So we certainly don't want to misrepresent what IT does from an operational perspective, because we haven't gone through the data with them. Procurement, this is just our preliminary analysis.
So basically, what I think my esteemed colleague is asking is to see even further the plan of the internal audit as well, with the numbers, to show all these numbers that he's asking for.
Well, these are for the financial statements, so this isn't for the internal audit. This
Okay.
is the GASB rules and pronouncements that Jeff and his team now have to include in the 2023 financial statements.
Okay.
Yeah, so I believe all the data needs to be gathered before we can make a determination as to what next steps to take.
You mean doing this GASB 96?
Yeah, it's, what I don't understand is if,
You gotta put your mic on.
what I don't really understand.
Put it on.
No, I had it on.
I'll put it on.
I don't really understand.
Thank you.
There's a very substantial cost to doing this. And I understand that the towns adopt the rules, we're bound to do it. But the question in my mind is, was it sensible to have the rule? There's not much we can do about it from this point of view.
That's correct. So this is something that's been set by GASB, and so NYCHA follows GASB accounting pronouncements. There's a team that sits up there at GASB that solicits feedback and information from governments across the country when they're developing these standards. So maybe that's something I'll say to this committee and to the NYCHA management team. When GASB's going through these exposure drafts, so they usually take several years for them to come to this final pronouncement. GASB really does welcome feedback from governments, especially large governments like large housing authorities, transportation organizations, counties, cities. They really do like the feedback, and so that's the chance for information to be sent back to GASB for consideration. And there are times when they kind of push a standard to the side and say, we're not going to take this any further based on feedback. Or that's the time when they'll make changes to the standard and how things are accounted or when they're accounted for. So I'll just say that NYCHA has to follow GASB. There's really no choice there. But perhaps when these standards are in the exposure draft stage, maybe that's a chance for NYCHA and the committee to provide feedback at that stage to be in the final version years down the road.
There is a rationale for doing this. I mean, I'm not saying I support it completely, but if you think about it, when we enter into a long-term debt transaction, we put the liability on the statement of net position. And readers like to see that as a commitment going forward. Well, leases are contracts that are long-term in nature if they're greater than 12 months. These SPIDs are transactions that are greater than 12 months. They're commitments that NYCHA has over 12 months. We've signed contracts, we're obligated to make the payments. But in the past, based on the current GASB, we were not reflecting long-term liabilities on our financial statements. So this is the driving force of it. So there is a rationale. It's not necessarily perfect. And, from the implementation perspective, it's very challenging and I don't appreciate it, but I understand it.
Thank you.
So in closing, we do plan on implementing GASB 96 in 2023, and we are required to restate 2022 financial statements. And Deloitte has not seen any of our data yet. I mean, we don't really have data. We're just going contract through contract at this point and trying to make interpretations as to whether it qualifies, if it doesn't qualify, why, and define the rules. So I will assure you that the next GASB will be more pleasant. It's GASB 99, the omnibus. And omnibus generally covers lots of things which are filling in holes from previous GASBs, things that were left out, things that they came across as problematic, you know, from implementing a previous GASB and they're just kind of fine tuning. So in many cases, we implemented different rules, or we at least examined different rules for our 2022 financial statements, because those parts of the GASB 99 were effective in the prior year. For those that were not effective in the prior year, they're effective in 2023. Classification reporting of derivatives, NYCHA has none, it's not applicable. Clarification of GASB 87 leases, we're still evaluating this, but it's not expected to be material. We will implement it in 2023 regardless. And then clarification of provisions of GASB 94 and GASB 96, which we were taking into full account as we review those particular statements. So, you know, we don't expect this to be a big issue for NYCHA, but we do need to go through and check the boxes and make sure we've covered everything. So with that, I'll close the presentation for the GASBs unless there are any other questions. Thank you.
Thank you, Jeff. And any questions related to what was presented?
I don't have a question, I just have a statement that I'd like to make.
Okay. Okay.
I want you all to understand that besides looking at it as an audit and finance committee, I'm also looking at it as to the end term, as to how all of this is going to affect the residents. And that is also one of my main concerns while I am here. And so some of the questions are actually related to the end game, as to once we do all of this, how is it going to affect our main concern, which is the customers? And that's coming from my part anyway. I don't know about my colleagues and anyone else, but that's my main concern as well. And that's just a statement I wanted to make.
And Mr. Gonzalez, I will say that we appreciate your questions. We always appreciate your perspective, and you should continue to ask and make sure that we are being responsive. If there are things you don't understand, we are always happy to clarify. So I certainly don't want you to feel as though, you know, you need to even preface your questions. You're a committee member and you have the right to ask them for whatever reason you'd like.
Thank you.
I have one question. Jill, you mentioned that the next meeting, next presentation is June of '24 for the comprehensive report. Is that right?
I think there's one in between.
Is there, that's why I wanted to.
April, I believe there's one in April.
There's something in between?
Yes.
Yes.
What is that date?
So that will be like a status meeting somewhere in March or April to go over the status of financial statement audit.
Okay.
Right.
Before, so in June meeting, they will issue annual comprehensive financial report. But prior to that, we will have interim meeting also to discuss the status.
Has a date been established in March?
No, we have not established the schedule yet, but we will soon reach out to finance, Deloitte, and we will develop a schedule for the next year's meetings.
Thank you.
Thank you.
Thank you. So the dates for both May and for both March and June will be established.
Yes. Yeah, so usually we have 4 meetings in the year.
The specific dates I'm talking about.
Yes, specific dates will need to be established, right? And of course, after reaching out to our partners, we will also reach out to the committee members to make sure that those dates meet your schedule, and then we'll develop the schedule
Thank you.
for 2024.
As we normally do, right?
Yes, yeah, that's what
Send
we
out
do
a
every year,
thing to
right?
figure out what the availability is.
Yeah.
And then we'll take it from there.
Right. Okay,
Thank you.
thank you everyone. So if there are no further items, we'd like to adjourn the meeting. So we'll need a motion to adjourn the meeting.
So moved.
Second.
Okay,
All in favor?
all in favor?
Aye.
Aye.
Okay, thank you. So meeting is adjourned. It's 11:17.
11:17.